Okay, so it's really good to have you guys here. I am Trader Benny, okay, and this is my live presentation. Thank you. Yeah, for the London break strategy. Okay, so today I'm going to make everything that is vague clear, and I'm hoping that we can finish in less than 1.5 hours. Right, so I'm going to go really fast. So you have to wear your shoes and your helmet and your gloves, and then follow me. The only thing that drives the market is fundamental analysis. I've talked about this in some of my, some of my lectures in the past, right? We know that it's fundamental analysis that makes the price to move for forex. In fact, there are a group of people who trade synthetics. Okay, so these guys that trade synthetics, what they do is they say that they don't want price to be affected by news. They don't want price to be affected by anything. Let it just be. Those of you who play sporting bet, you know about virtual. So virtual is there's no real match. I've never played virtual. So, but I understand that the concept is that even though there is no real match, the algo, that's the computer, in this case now, the betting Ninja, like the company in charge of the betting, right, has a computer, program that has been set to make it look like there's a match that is going on. So the outcome is random. Okay, and in reality, it's the same thing with trading, with the actual match, right? You can say, okay, I know PSG is going to win, but every once in a while, you see that they don't win. Okay, so that's the same way the algos work. In trading, what controls the market is fundamental analysis. You have to take note of this. When I say fundamental analysis, what I'm talking about is for Nigerian currency to improve, Nigeria's economy must improve. So it is a given that if Nigeria's economy improves, Nigerian Naira will improve. So you see that, the only problem is that you can't go to the chart and place a trade based on that, right? Because you don't know where your stop loss will be, you don't know where your entry will be and all those things. Okay, that's why we have the TA. Right, so but what drives the price is not your technical analysis. I am saying this clearly so that you will know that the strategy I'm about to give you, it works. Okay, it works, but it is not what drives price. So that you don't look at a pin bar and then put your life savings on it. So that you don't look at an engulfing bar and put your life savings on it. You don't look at an indecision bar followed by a trend bar and put your life savings on it. You don't do that. Okay, because TA is probability. That's what it is. It is probabilistic. All right. What is not probabilistic is fundamental analysis. But fundamental analysis cannot tell you where to put your stop loss, where to put your entry, where to put your target. That is why traders absolutely must fall back to technical analysis. If you want to be a day trader is somebody who takes a trade on the same day and closes it on the same day. If you want to do that, you cannot say, oh, Nigeria is, okay, let's assume Peter Obi won the election. Nigeria is going to get better. I think that might, help the dollar against the Naira to make it appreciate, to make Naira appreciate against the dollar, right? So if we're saying that, then it means that Naira is going to appreciate. If you are a long-term investor or a long-term trader, you can say that and get away with it. Okay, so just put your money and go to bed. Forget about it 1 year, 2 years, 3 years like that, and then come back. But if you're hoping to make a monthly return, that's you're hoping that by the end of this month, I want to withdraw money to feed my kids, to pay my NEPA bill, pay my fuel my car, pay my child's school fees, and do all these things. If you're hoping to do that, you need technical analysis. And technical analysis is, I am saying this now, technical analysis is probabilistic. There are 3 principles of TA. There are 3 principles of TA. All traders must know this. The principles of TA, number 1 is that history repeats itself. History repeats itself. We know that if London behaves a certain way, there is a tendency that London will continue to behave that way. If a support has been used before, there is a tendency that that support price will react from that support. If price gets there again, that's what we're saying. We're not saying that it must. That's the first principle. Principle is not, is something that is like the law of gravity, is a given. It's a principle. Price repeats itself. Price moves in trends, right? That is a principle. If you look at your chart, look at any chart, you observe that price will move in trend. That's the way it's designed. Now, it could come out from a strong trend to a weak trend to a trading range to another trend, but it will just keep going in trends. And then the last one is that the chart discounts everything. That's why we do not need fundamental analysis. Traders always look at the chart and say, even if Donald Trump says something, even if Joe Biden says anything, okay, that is supposed to affect the dollar, we don't care. If I open my chart, I'm going to see it. Okay? If there's a news that's discounted, it's going to reflect on my chart. So what is the use killing myself about whether Donald Trump said something or not? It's not my business. If he says something and the thing is bearish, then I see a bear bar that breaks out. Then it means that what he has said is bearish. I'm going to trade. I don't care what he says. Right? You have to make everything simple for yourself. You have to make it easy for yourself. Okay, what is supposed to be difficult is actually digging out a strategy that works. Right? Going back to review your trades. These are the things that should be difficult. But the actual process of trading, placing a trade, is supposed to be easy. Okay, you can't go and search for all the fundamental information from all the fundamental variables and try to use it to trade. It's going to be difficult for you guys. It's going to be difficult. Okay, so I've made this thing very clear now so that you can understand that I have said it, that TA is not 100. If you're looking for any technical analysis that gives you 100%, you will never find it. And you don't need 100% outcome to be profitable in forex market. Go and look at some of the videos I put on the YouTube here. Okay, this is a course. These students paid for this course, mind you. They paid for this course. And I taught them physically. I only take about 12 students. That's what I do. Even now, if I have my group mentorship, it's maximum of 12. All right. And then one-on-one mentorship, just one person, maximum of 3 to 5 at a time. Okay. So if you look at this class, these guys are paid heavily, but I'm posting these videos now on YouTube for free for you. Okay. But if you happen to know any of them, ask them how much they pay. They pay heavily to sit down there because you have to pay for the chair. So when you come every day, you sit on your chair. Right? So look at some of those information I've given to them. It's still the same because the market then and now is still the same. Okay. So I want to encourage you, go over some of the, I'm going to be posting once every week. Every week I post a new one. Every week I post a new one. Okay. So every week I'll post one new class. All right. Because it has to go through the editing and production. So at least by every end of the week, you should get a new class. A new class treats a new subject. The last one was trading edge and probability. Okay, so next one's going to be the next topic, like that. Okay, so it's a free complete course that you can take. All right. Okay, so having said that, I want you to understand, like I have just said, that TA is not 100%. What I'm going to teach you now, what you're seeing here is a rule. What we're saying is this is a strategy. What is a strategy, guys? What is a strategy? What is a strategy? A strategy is, this is the only thing that will happen before I participate. The market is chaotic. The market is chaotic. I'm saying this now because it's important. Don't fight with the market. Don't argue with the market. The price is king. The market is the ruler. We are followers. And unless you appreciate this concept, you're never going to make money. You will keep going on the wild goose chase for a perfect strategy. We are only followers of the market. The market does what it wants. If it wants to go up, it will go. If it wants to go down, it will go. The good thing is that there are the principles of TA that are laid down for us that we can adopt to bring out some sort of rules. Okay, going by the fact that, okay, prices move in trend, history repeats itself, everything will be on the chart, I don't have to bother about the news and other things, right? Going by these principles, you cannot say, okay, I'm going to use this set of rules, and then this is the language that the market must speak before I participate, right? So you're telling yourself, do what you can or do what you like, but this is the only language that you will speak before me personally will place a trade. If you speak German, if you speak French, if you speak, I understand English. If you speak, Chinese or any other language, I mean, like I said, the market is designed to create confusion. The market is erratic. It's chaotic. Every minute the market makes you want to buy. Every minute the market makes you want to sell. That's the way the market is designed. If you think that you have done your proper check and analysis, open the chart. You will see that immediately you open the chart, somebody has an argument for why that your position is wrong and why you should take the opposite side. Because that's the way the market works. So how do you fight this thing? You cannot open your computer and pick up your mouse and say, I want to look at what the price is doing and buy and sell, just following. You're going to lose all your money. You will blow your account in one sitting. So the only way you can avert what I've just said is open the chart and tell the market that speak English. If you're not speaking English, I won't participate. That's what a strategy is. A strategy is participation. In this world of chaos, my strategy is the only thing that's going to make me participate. That's what you're saying to the market. I'm going to participate only when you speak English. And that is very important, guys. That's very, very important. And it is fundamental. You got to take note of it. It is fundamental. And I say it because a lot of people do not make peace with their losses. Okay? A lot of people do not make peace with their losses. If you look at so many traders who blow their account, check the reason why they've blown their account. All right? So a lot of people have not made peace with losses. Okay, I posted on my Twitter the other day. I said that it is one thing to say, yes, we agree, we know that the market is probabilistic. It's another thing to actually accept that your outcome is probabilistic. It's a different thing. They're not the same. You can agree with everybody and say, yes, we know that forex is a game of probability. But you personally, have you accepted it? Have you accepted the fact that, yeah, I know it's probabilistic and I'm putting my money on it and I know that the outcome is probabilistic. Have you accepted it? Or is it that when you open your trade and the market starts to go against you, you begin to fidget? Did you just accept that it was probabilistic and the next minute you are scared that your stop loss is about to be taken out? Then you did not accept the risk. You did not accept the probabilistic nature. This is very important. This is very important. This is very important. There is no 100% strategy. I'm going to give you a good strategy, which is already in front of you. Okay, but it's not 100%. It's not guaranteed. And then before you use this strategy, I beg you, please go and do your back test. Go and do your back test. If you don't do your back test and you use this strategy, you're going to see me. I'm going to post my win for the day, and you're going to be in loss on the same strategy. Why? Because you did not fine-tune your strategy. See, one of my favorite quotes is, I fear not the man who has practiced 1,000 kicks, but I fear the man who has practiced one kick 1,000 times. Right? So this particular execution, you have practiced it 1,000 times. You can't be compared to somebody who has never practiced it or has just practiced it once and he has 1,000 different types of kicks. You guys are not the same, right? So take note of what I've just said. These things I've said are very important because I can just go straight to the chart and tell you, okay, this is where you buy, this is where you sell, and then you come back and lose, and then you think that P. Surgeon doesn't know what he's doing. I'm a good trader. I'm an exceptionally good trader. If you doubt me, come and sit down and watch me trade every day. I'm not talking about once in a while. Come and watch me trade year in, year out. If you're not comfortable, if you're not satisfied, come and see my bank balance. I drive a Bentley, I drive a Lamborghini. And you think I'm not broke? I was broke. I was broke. And I always say it, I was broke. I didn't have nada. I didn't have nada. My mom didn't have no money. My dad died when I was 13. I didn't have any money. I served my uncle for years. I went to school, I finished. But I started learning this thing. So you can learn it and you can make money. You can change your life. You can change your story. You can find emancipation in the market. This is the only place where anybody can find emancipation. This is the only place here. Anybody. Any Tom, Dick, and Harry, anybody can find emancipation here. You don't need to be smart. You don't need to be a medical student. You don't need to be the Harvard best. You just come and find your own language. That's all we are saying. Come and find your own language. When you find your own language, then you begin to milk the market. So let's get into this thing real quick. Now, what is a good strategy, right? What's a good strategy? Because what I'm giving you are the rules, okay? Giving you the rules, right? Giving you the rules for the London break or the London sweep strategy, okay? Already, this is a continuation of the previous video. If you didn't watch the previous video, I suggest you watch it immediately after this class, okay? Because you may not understand certain things if you have not watched that video, okay? And I'm not going to go too deep into the other things that I've talked about already. All right, so these are the rules for you to execute the trade, okay? And I ask a question. I say, what is a strategy, or what makes a strategy a good one? Okay, what makes a strategy a good one? If you design any strategy, make sure that the strategy factors into it the condition of the market. Okay, that's one thing you want to make sure. And then when the condition is taken care of, make sure that the strategy is taking care of what the present direction of the market at that time is. All right, if the direction has been taken care of, you want to see liquidity, because this is how the market moves. Okay, this is how the market moves, right? That's how the market moves. If there's no liquidity, if there's nobody who is placing his stop loss or his entry price at a certain place or at a certain point, the market will not move. So is buy side liquidity is triggered, then sell side liquidity becomes triggered, and the market takes the sell side liquidity, it starts to head for the buy side liquidity. That's how the market moves. Okay, so it's from liquidity to liquidity. All right, so take note of that. All right, and then once this thing is taken care of, the next thing you want to see is your entry. Okay, so take note of these things, guys. All right, so the condition of the market, your strategy should be able to tell you. Okay, so what we're looking at here is we want a smart, we want clarity. We want clarity. We want a reason to participate. Okay, so for the condition, all right, for the condition, I'm going to be making reference to my own strategy here. Okay, because that's what I'm going to show you now. All right, for the condition of the market, we're talking about the market cycle. Okay, the market can either be ranging, the market can be trending, the market can be in a strong trend, the market can be in a weak trend, the market can be in a healthy trend, right? There's something we call the Wyckoff cycle, right? The accumulation, after the accumulation, you have the spring. After the spring is the liquidity sweep. After the spring, you have the markup. The market starts to go up, and then when the market goes up, it gets to a certain height, and then it eases out, right? It eases out. That's the distribution phase, and then you have the uptrust, which is another liquidity sweep at the top. And then there's a markdown. Okay, so when the market is flat, accumulating or distributing, you don't want to be there. All right, so your strategy is supposed to take you away from such markets. So you're looking for a condition that says, okay, a strong trend or a healthy trend that is less likely to reverse. All right, a strong trend that is less likely to reverse. So we're saying let the market be either in a markup or a markdown. Okay, so let the market be going up or let the market be coming down. So that is the condition. So this is the reason why I take major pairs, because I put them together and I look for where the trend is strong. And then when I find that there's a strong trend ongoing in this pair or in that pair or in the other pair, or there's a healthy trend ongoing here or here or here, then I participate there. Okay, so I'm going to participate Only where the strength, there is strength and there is liquidity. It's just like saying, where is the big bucket? Where is the money moving? On what pair is the market flowing? That's where I want to be. I'm not here to compete with anybody to prove that I can, draw fine charts or do whatever. I'm here to make money, right? Okay, so the condition has to be taken care of. Take note of that. If you design your personal strategy and you have not factored in condition, that strategy is going to work for some time, going to stop working after some time because you didn't factor into it the condition of the market that you want. So it doesn't still mean that you cannot, the condition of that market cannot reverse, right? You can say, okay, this is a strong trend which is less likely to reverse, but it will still reverse. Because why? We don't know. We don't know. Nobody knows. Okay? I was telling somebody this morning, he said he didn't take the London trade. And I told him, you have to take the trade. You have to take the trade. Because there are so many things that are moving the market, apart from banks. Ordinary business move the market. If not, the price will remain where it is on Friday and after bank closes, and then continue from where it is on Monday morning or on Sunday night because of Sydney time. So there are many things that move the price. So trade if you see your setup. And then you have to know what direction, of course. You've got to know what direction. That's where market structure comes into play. Okay, you got to know what... I'm going to teach you how I find my strong trend that is less likely to reverse is... okay, when I get to pair selection, I'm going to talk about that. When I get to pair selection, all right? I'll talk about how you can find the right, market to be on. Okay, the right market to be on. Then for the direction, of course, market structure. You want to know who is in control. If you have seen a strong trend, you have to know clearly whether it's buying at that time or selling at that time, or whether it's getting ready to reverse. You have to see that thing. Okay, so it has to be clear on a lower, time frame. You want to see the direction. All right. And then something else that you need to look at is, liquidity. Liquidity. You want to see, volatility, right? That's why we like to come in during the London break, because of the volatility. All right. Because of the volatility. There is volatility. There is volatility that comes in with news, with the New York session, with the, what's it called? With the London session. Okay, so these are three ways that you can capitalize on liquidity. The problem I have with news is that news is always frantic. Okay, it races too fast, and sometimes there are some that are very destructive. They don't mean to go one direction. Okay, they go up, down, up, down, up, down really fast. And whether you're buying or selling, you're going to be stopped out. So those are the kind of news that traders should avoid. In my course, I teach news straddling. That's how traders can milk the news. Okay, it can be done. Okay, and I teach it. So, but this is advanced stuff. This is advanced stuff. Okay, the volatility that comes with New York is more difficult to trade. It's more complex to trade. So the only people I teach that one to is my one-on-one students, my group mentorship guys, because I know I'm going to spend more time with them. I'm going to explain these things to them, and I'm going to, be sharing the opportunities with them, right? So, but for the guys who are, just starting out with me, you can learn the London one, which is really simple. London has enough liquidity for your 1:2. London's liquidity will give you 1:2 guaranteed. Okay? That being said, the next thing, of course, the fourth and last important thing is your entry. Okay, so that's your confirmation. I don't like to call it confirmation, because when you say the word confirmation, it makes some traders to think that because we have called it confirmation, it means that it cannot fail. Okay, do not make that mistake to think that because Trader Benny said this is the confirmation that this trade is going to work, then you now put your life savings on it. Okay, because I have confirmed it with my entry. No, that's not what I'm saying. So please take note of all these things. All these things I'm saying are very important, because the problem is not the strategy. The problem is how you are thinking when you are placing the trade. That's what I always say. It's not It's not the strategy's fault. Okay, go and backtest the strategy I've given you. This one now, go and backtest it. You will see that no matter what you do, no matter how you go about it, you must be profitable. Must. So how come you use this same strategy and you don't make money? That's because you're not thinking right. You're in a hurry to leave the trade. You're in a hurry to enter the trade. You're not managing well. You want to close it before it gets to target. You're scared because it's pulling back. You quickly want to take out your risk on the market by breaking even. And then the market stops you out on break even and then the move goes. See, this is the way you are thinking as a trader. That's what is messing up with your result. It doesn't mean that the strategy is not working. Okay. So let's go over the rules. So take note of these things I have shared with you here, right? Because these are very important facts. Okay, away from what I'm teaching you here today. If you design any strategy, make sure your condition is taken into consideration: the direction, the liquidity, the entry. SMC traders, when they come in, they look at liquidity, right? They look at liquidity, all right? And the way I use my entry, it goes along with the ICT guys, okay? Because I want to see an inside bar. Okay, that's what they call order block. Okay, but I don't care. I don't care. Okay, I'll just do what is simple and easy for me and I make money. It's probabilistic. No matter whether you're using order block or whatever, all of them are still probabilistic. Okay, so there's no need going on the wild goose chase for the perfect thing. All right. So this strategy is very simple. I taught it the other day. I showed you and I told you that what is most important for me to do for you today is to tell you whether the market is going to go up or it's going to sell. Okay, whether it's going to buy or it's going to sell. This, I think, is the most important thing to give you today. And of course, the rules, so that you know how to trade it. Because you guys see my result. Just a few of you who are doing really well, sharing your trades with me, showing me how you're using the London session and making money. And I'm happy to see that. Very happy to see that. Okay, but the rest of you, I want you to join this train. The train is moving. You have to catch it. Right? You got to catch it. Okay. So I'll do my best to share this as clearly as I can. Okay, so how can you, as a trader, how can you know for sure if the next day is going to buy? How can you know for sure if the next day is going to buy or sell? How can you know for sure? No, we cannot know for sure, but we can predict it by looking at the historical data. I hope that makes sense. Nobody knows for sure what the next bar is going to be, but we can say that 80% of the time, if this happens and this happens, this is the next thing that should happen. All right, that's what we're saying. So now let me tell you what I'm talking about here. Now, if you're going to use my strategy, what you have to do, or what I advise that you do, is what I advise you to do. What I advise you to do, guys, is go to the daily time frame. Okay, go to the daily time frame. Of course, you're a day trader and you want to know if the bar is going to be, a white bar. That is, if the next bar, or the bar today is Monday. I believe today is still Monday. Tomorrow is Tuesday. So we are saying that, how do you know that Monday's bar is going to be green? And how do you know that Tuesday's bar, that Tuesday's bar is not going to be green, is going to be red or black, right? How do you know that Monday will be like this? And then what will Tuesday be? Okay, that's the question, right? That's the question. Okay, so I'm going to give you a few patterns that I use real quick, all right? As we progress, I'm going to teach you more, all right? Because this is bar by bar analysis. It took me years to learn. It took me so many years to learn, okay? So The good thing is I can simplify it for you and tell you what is important. Okay, but if I show you the volume of books that I had to read to understand this concept, you will never even want to trade. Okay, because I mean, you will not want to go over those books. They're really difficult. The guys, he gives you a chart and then he's analyzing each bar. It's difficult. Okay, but there are some very, very common recurring patterns. Okay, for you to know that if there's something we call area of sensitivity. Area of sensitivity. Okay, area of sensitivity is on your chart. You should be able to draw zones. These are areas where the market is moving from. It's going up, it's coming down, it's going up. It gets to this one, it breaks it, it goes to the next one. Okay, these are areas of sensitivity, right? This is the first zone, right? This is a zone. This is another zone. This is another zone. Call it whatever you like. That's a zone. Call it whether you call it support and resistance, supply and demand. What do they call it? Frequency, level, and what? I don't know. All these things. But this is a zone. Okay, a zone is when you look at the price on the daily time frame. You place the horizontal lines on them. Okay, these horizontal lines must have 3 conditions. Okay, the price must have touched it at least 2 times. Okay, price must have touched it at least 2 times. All right, there must have been a strong break. Okay, so what we are saying is very simple. We are saying that if okay, I think I'm running out of room there, so I will just come back here. Okay, so for you to draw this line and make that line valid, you need at least 2 bounce. 2 bounce, whether from the upside or downside, but the market should have gotten to that place at least twice and respected it. Then you need at least 1 strong break. The market cannot crawl past it. The market cannot crawl past it. If that level is a sensitive level, if that level is a magnet, if that level is a strong level, price cannot just stroll past that line with up down bars, range bars. No. You will see a strong break. It's like breaking through a roof or the floor. I cannot break through this floor with just, little tap. I need a strong force to break through. That's what I'm saying. So you must see a strong break, huge bars, strong trending bars, gapping bars will pass through that line. Then you know that line is important. Okay, so you call that line a zone. There are few of them. You don't have to draw so many, at least 3 or 4 of them max. I usually have just 2 of them or 3, because I want to see where the market has come out from and where the market is going to. Okay, so from this magnetic level to the next magnetic level, from this zone to the next zone. When it gets to the next zone, will it break it? I don't know. Will it reverse and come back down? I don't know. Right? I don't know what it's going to do. The only thing I know for sure is that this is an important area. Now, let me teach you how you can know that the next bar is going to be green or red. If the market comes out of an area of sensitivity, this area is a sensitive area, right? And the market starts to leave this area with trend bars, right? With trend bars. Take note of what I'm saying. With trend bars. If you see an exhaustion bar, an exhaustion bar is a candle like this. It's like a pin bar, but it's in the direction of the trend. See, a pin bar like this. This is called an exhaustion bar, right? This is an exhaustion bar. It's an exhaustion bar. Okay, that's an exhaustion bar. So if I find this exhaustion bar, along the line here, there's every tendency that the next bar is going to be green. Continue upwards. Okay, take note of that. what we are saying is, if the market is coming from an area of sensitivity and these are all trend bars. These are all trend bars. It will continue. That's what we're saying. So if the market is coming out of an area of sensitivity and is shooting away from it, it has momentum. What we call this is impulse move. This is an impulse move. Okay, so it has strength, right? So it's going to make the next bar would likely be green. This is what we're seeing. This happens so many times. Take note of this. This is an exhaustion bar. I'm not calling this. This is also green. This one is green. This one is green. This one is green. So the next one will likely be green. Even if the market does not have volatility for the next day, and you have a red bar or a black bar after your exhaustion bar, this is your exhaustion bar. This one here is your exhaustion bar, right? This is your exhaustion bar. Okay, why we call it an exhaustion bar is because the market tried to reverse this strong downtrend, but it couldn't reverse it, and then it finished higher. So it's exhausted. So even if there's no momentum again on the next bar, this is going to be really small, right? The next one will most likely take it out. Go and look at your chart. But usually, the white bar comes next. But even if the white bar doesn't come next, it will come after this one. And then if that doesn't happen, you know that there's a reversal. Why do we have this strategy in the first place? Why do we have this strategy? And the way we trade it. So that even if we are wrong, this black bar you see here is going to be a reversal down or a trading range. That way, our entry will not be triggered for a breakout. I hope you're getting it. Okay, you're going to see the market will just stay in a range. It won't trigger the entry to buy. And then even if it does, we take the loss. We take the loss. It will just be 0.5 or 1%. And then we move on. Right? We take the loss and we move on. Take note of that. Okay, so this is one way. There are several ways, guys. There are several ways. But this is one setup that you can look out for. An exhaustion bar. An exhaustion bar will always be followed by a subsequent similar bar. Okay? It will always be followed by a subsequent similar bar. Right? So, take note of that. Now, another thing that you can use, I'm going to go to the chart and show you one or two examples, okay? Randomly. All right. Another thing that you can use is from an important area. This could be trend line. This could be support and resistance. It could be anything. Once the market prints an indecision bar followed by a trend bar, right? And a follow-through bar, the next bar is likely going to be green. So this is, the market is telling you that I have strength. I thought pressure. I don't know if I've posted pressure. I don't think I've posted the video on pressure. I'm going to post all these videos on my YouTube channel. Okay, so you got to subscribe. Just subscribe so that you get the information firsthand as I send them. Okay, so make sure to subscribe. I'm going to keep posting these things and then go over the classes. I'm going to try to redo some of these videos without teaching so that they are short. Okay, so that they are short, right? So, but in the meantime, I mean, in your spare time, open up those videos, look at them. I have very, 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 very good videos on the channel already that can help you at least rewire your brain to an extent where you start to think correctly before you now talk about making money. Okay. So now back to okay, let me just show you on the chart. Let me show you on the chart before I go on. Open the charts real quick. I'll show you these two patterns that I've just talked about. Let's use this. Okay. And then any time frame, anytime at all, right? You find them. I don't know what time frame this is, but I'm just going to zoom in and then show you a couple of things. Okay, so we're looking for, this is an indecision candle followed by a trend bar, right? You can see the market is quiet here, but this white candle is inevitable. This white is inevitable. It will happen. It might not happen, immediately, but you know that the momentum is to the upside, right? There's so many of them. I'm looking for. This is an exhaustion bar. This is an exhaustion bar. The one I just talked about. This is an exhaustion bar. This is the market coming down, and then the market tries to reverse, right? It tries to reverse, and then it's exhausted. It comes back and it's black. The next bar has to be black. The next bar has to be black. Right? Okay, you can see this is a clear sign of exhaustion. Now, you might look at this one and say, oh, but this is not exactly it. But there's a pin bar here. I mean, there's a rejection as well on the opposite side. That's not a good sign. How about this one here? Look at this one. How about this one? Market goes up, and then, okay, this is not an uptrend, but except if this is an area of sensitivity. Once the market goes up and flushes, right, exhausted, the next bar is going to be white. Okay? It's there on the chart, it's everywhere. Right? And then traders can, use these things to milk the market. Look at it here. Look at it here. Market is rising up. It's rising up. And then there's an exhaustion bar here. There's an exhaustion bar here. See this one. That's your exhaustion bar. What follows it? It's the white bar. So if you're trading London session for that day, you know that this bar is going to be white. It's going to be white. Even if the bar doesn't want to be white on the next day, the next one will be white. And what if, just what if the next bar does not want to be white? Your entry will not trigger you for a buy. Your entry will not trigger you for a buy. You will see if the market doesn't want to go in this direction, it's going to break out in the opposite direction to the downside, right? Stopping you from participating in the trade. That's what we are saying. It's simple maths. It's simple logic. It's really simple, trust me. It's simple. And then it happens everywhere, right? It happens everywhere. Exhaustion bar, market goes up. Exhaustion bar, market goes up. Okay, so I still have to talk about the strategy. So you go to your chart and look at these things for yourself. Okay, exhaustion bar, next bar is white. Okay, inevitable. What we're saying is, in a strong trend, in a strong downtrend, in a strong uptrend, exhaustion bar, next bar is white. Okay, so are you going to wait for only when you find an exhaustion bar and the next bar is white before you trade? No. Okay, no. But it's an edge. It's an edge. An edge is an advantage. Okay, you are adding weight to your coin on one side, and then when you look through, now those of you who can see here, I don't know if this is going to be clear enough, but these are all the major pairs. I'm talking about all the 7 big boys, 7 big countries, big economies. The America dollar, euro, pounds, Australian dollar, New Zealand dollar, Swiss franc, that's CHF, what's it called? A Canadian dollar, and then the Japanese yen. These are the top 5, the top 7 currencies. All right. And then what I've done here is very simple. I just put them together. Okay, you can see the way I arrange them. You won't find this stuff anywhere. Thank you. Yeah, you're welcome. You see the way I arrange them? I took my time to put them together like this in this grid system because it won't happen automatically. Okay, so what you can see here is everybody on this row here is the dollar pair. Everybody on this row here is pounds, right? Everybody here is pounds. Everybody here is euro. From this first one here, throughout here is euro. I already know where all of them are seated. Everybody here is Japanese yen. Everybody here is Canadian dollar. Everybody here is Swiss Suzy. That's Swiss franc. Everybody here is New Zealand dollar. Everybody here is Australian dollar. Everybody here is GBP. So I've arranged this thing, and then what you can see here is I'm simply looking at the flow. That's all. This is H1. I'm looking at the flow. I'm going to get to it. Okay. So traders can put this thing together like this, and then easily, see where the move is happening. Okay, where is the strong trend? Where is the strong trend? And then you stay with the strong trend and make money. Simple. Okay, we're not proving anything to anybody. We just want to make money, take our own share and go. We are not the market makers. We're only taking from the bucket. Okay. So I believe it makes sense. I think there's one thing I should share. The other example I talked about, if you look at the daily time frame on USDJPY, I talked about the indecision bar followed by a trend bar. This is an indecision bar. This is a trend bar. The next bar will be white. It's a given. The next bar will be white. Take it anywhere. Next bar will be white. Indecision followed by trend bar. From an area of sensitivity, there's a tendency that the market will go up. That's what happens. Is the way the market behaves. The market will go up from here. And it was part of my weekly analysis where I told traders that from here, I think the market was just here. And I told traders that from here, I'm going to take a buy, put my stop below the indecision bar, and then I'm going to take the trade all the way to the trend channel line. And you can see clearly that's where the market is reacting from. Okay, it reacted from here. It's reacting from here now. The day is almost over, and you can see the market is clearly reacting from there. And then somebody comes and says that TA doesn't work, or says that price action is not working. It's not true. It's not true. This is the market bouncing off of these lines, and then you can clearly see them. Right? What you have here is what? It's a simple flag, simple triangle, right? And then what do you have here? Trend channel line, for Christ's sake. It's trend channel line. This is a trend channel line. And then if I take this trend line up there to the channel, right? You can see this is where the market is reacting from. You can see it. It's reacting from that point right there. This is TA. This is TA. So since I know that the market is going to react from that place, it means that I'm going to be, this is when we say a strong trend, less likely to reverse. This is a strong trend that is likely to reverse. Take note. This is a strong trend that is likely to reverse. What is happening today is trying to reverse. We did not see the continuous white trends that we have been seeing, white bars that we have been seeing. Are you getting the point now? And then if you look closely here, what do you see? You can see that we have what looks like exhaustion bars. But even this last exhaustion bar did not work because there's a resistance. There's a trend channel line. There's a trend channel line. Okay, I'm going to teach you good stuff. I can guarantee that. Okay, just stay with me. Take your time. Don't be in a hurry. I always say, don't be in a hurry to make money. Don't be in a hurry to know everything. Okay, I'm going to teach you everything in time. Okay, I'm going to teach you everything in time. And you're going to thank me. You're going to thank me. I know you're going to thank me. Okay, and I mean, most of this stuff I teach you, you don't find it anywhere. You don't find it easily. You don't find it easily. Okay, so don't be in a hurry. Make sure you have taken everything you can take from me, right? Before you try to move. Okay, so back to this. All right, so let me go over the rules real quick. Okay, because I know most of you are familiar with the rules. I just said let me write them out. Okay, let me see how long we have been here for. Okay. So I'll go over the rules, and then I'm going to teach you how you can correctly execute these trades. Correctly execute the trades. Just notice that it went off. All right, guys. So the market structure has to be, remember what I told you from the beginning when I said that usually your strategy is supposed to take care of the market condition, because I hear traders say, oh, my strategy is no more working because the market condition has changed. So why don't you put the market condition into your strategy, right? To make sure that if the market condition changes, it doesn't concern you. Okay, you are going to look for the market condition that is right for you and hope that it continues. The market has inertia. Market will continue to do what it has been doing. If the market is in a trading range and you think that that trading range is overdue and is going to break out, boy, you are wrong. If you put a buy order above the range, the market will pick it and run back into the range. Why? Because the market has inertia. If the trend is going on, the market is pulling back and continuing, pulling back and continuing. And you think that the market is going to stop doing that and reverse, or you think the market is going to stop doing that and go into a range, and then you're trying to pick the top or pick the bottom, you will be wrong because the market will shoot to a new high. Why? Because it has inertia. It will keep doing what it's doing. So based on this, we have said, okay, let's make sure that the market condition is favorable. By doing what? By doing the consensus. All right, it's under pair selection. I'm going to teach you that. Okay, the next thing there is the direction. The direction is taken care of by what? Market structure on H1. As simple as this sounds, I want you to understand it. Market structure on H1. What we are saying is higher high and higher low. Kalas. Kalas means finish. Okay. Higher high and higher low. 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 Which market on H1 is giving us higher highs and higher low? Higher highs and higher low. Which market? This is the direction. This is age old, as given to us by the man named Dow. It is still effective till tomorrow. Don't make it complex. Don't make it complex. It's effective till tomorrow. Still working. Just open your chart and look at the trend. Look at which one is making higher highs and higher lows. You are done. Once you see which one is making higher high and higher low, how do you know when is no more making higher highs and higher low? When it has been invalidated. Once the market invalidates that thing that it is doing, right? When the market invalidates it, then you now say, okay, it has been invalidated. I have to wait and see if there's going to be a reversal. Okay. Right. So what we're saying is, just watch. Market is going up, right? If the market is going up, coming down, going up, coming down, going up, coming down, right? You just keep following it like this, right? Just keep following it. All right. You draw a line here, draw another line here. Now, at this point, you know that this level is the valid level that should not be broken. Okay? It should not be broken. If I say it should not be broken, what I'm trying to say is that because this level has sent the market into a new high by beating the previous high, this level becomes valid as the level that should not be broken. And what it means is that the market is going where? Up. So the direction of the market here is up. I hope that is clear. Having known that, what do traders want to see? That this pullback does not enter and invalidate this level. So if this thing comes down and the thing starts from this point to go up again and it breaks this level to a new high, right? Traders know that this level is the new boss, right? Which should not be broken. It's the new boss that should not be taken out. If the market comes back instead of going upwards, it takes out this level. The market takes, once this level is, even if it's the wick of the candle that touches this level, then this boss is not a boss anymore. It means that the market is no more going up. As simple as this thing sounds, that's all you need to look for in H1. Once you see before the day, because I see some people are not sure whether they want to trade the breakout or the liquidity sweep, right? They're not sure which one they are trading. Are we going to trade breakout today or are we going to trade liquidity sweep, right? They don't know. This is your answer. Go to H1. When you get to H1, on H1, what do? check if the market is going up and if the guy that is leading the market to go up has not been invalidated. That's all. As long as the market is going up, even if it is pulling back, or as long as it has not gotten to this guy, you are still up. This is as simple as it is. I'm not going to say anything more than what I have said because that is what it is. There's no other way to put it. There's no sugarcoating it. There's no making it fancy. This is what it is. I'm only going to show you in the chart. Let's go. Okay, so now you can understand why I have this many charts at the same time, because I'm looking at it, I'm keeping tabs. I have 20 and 50 on it because I want to see it fanned out. I want to see it, I want to see that it has been coming. The direction of the moving average tells you that, okay, this market has been coming from, you know, an upward direction. All right. Sometimes I have to open it to see. Okay, so, but what you can see here, this is Euro USD. This is Euro USD. What you can see here is, this is valid. And I mean, guys, have we not been milking Euro USD and all these other guys all through, you know, last week and the following and even this week? As early or as, I mean, as early as this morning, I had a trade on Euro USD that gave me money that I'm going to show you, still based on the same strategy, based on the same principles. See here. This is your boss. This is your boss. It was here before. The moment this level gets taken out, right, it makes this one the new boss, right? Now, who is the next? Who is the boss? Now, we are interested in selling from here. We are only interested in selling. All right. Now, if you didn't take a sell here or here or here, it's fine. Okay. As long as this is still happening, you are selling. The only way that you can switch to buy is when this level I put here has been taken out. Once the market goes beyond this level, you know that the direction of the market is no more down. I hope this is clear. So this is how we continued. And then we put it here. The moment here was broken. So once this high, this low in this case, once the low that this market made here is taken out, right? It means that this guy is no more the boss because the low he made has now been taken out. So what do? We bring the market now down to the new low. So this is what you're going to keep doing. You're going to keep doing it, keep moving it to the low, keep moving it to the low. Now, it wasn't taken out. Look at here. It wasn't taken out. Look here. It came back all the way to this point, but it wasn't taken out. Right? And then the moment here is broken, this low is broken, we bring it again down. Don't make it complex. This thing I'm showing you is very simple. All we are saying is let the market be steaming down. Let the momentum be to the downside. If the momentum is to the downside, then traders can now say, okay, the direction is down. I'm going to only take selling setup. Because if you try to trade the pullback, if you try to trade a breakout against the boss, right, you might win. But it's not profitable. That's what I'm saying. What is more profitable is that you are in the direction of the market. Because if you take 100 when the market is not moving down, if you take 100 when the market is not moving down, and take 100 when the market is moving down, you will get like 60 to 70 correctly when the market is moving down. And when the market is moving down, but you are still taking the ones that are going up, you will get like 40 correctly, but you'll be losing about 60. That's what we are saying now. So you have to go with the direction. You have to go with the direction. That's how you're going to make money, right? So where are we currently? This is the new level. This is the new level. This one here. I have to move my screen, I think. Yes. Right. So where are we? This is where we are. Why? Because this level has been taken out by this black bar here. Who caused it? This person. That's what you ask yourself. Who caused it? Who led to the low? This person. Who led to this low? This guy. Who led to this low? This guy. Who led to this low here? This guy or this guy? Who led to this low? This guy. Who led to this low? This guy. So this is how to define your direction. Now I'm going to try to see if we can look for something where the trend changes. Yes. Now, in this case, observe, we're going, just forget about this, right? Let's assume that from here, we have an uptrend, right? From here, we have an uptrend. Okay. From here, we have an uptrend. Okay. Why? Autoplay, sorry. Okay, so we have an uptrend. Who broke this level here, right? And then this is where it originated from. This is the boss. This level should not be taken out. And then we wait to see, has this level been taken out? This high here? Yes. Who took it out? This guy. Who caused it? This one. Okay. So we move our market to this point, right? And then the next one, okay, is this is the level. This one has taken it. This is the new level. Okay, you can put something here to let you know where that level is, right? This is the guy that took out the level here, from here to here. Sometimes you can, put a line just the same way you have this line. So you have just two lines, right? And then who took it out? This guy took it out. Okay, this guy took it out. And then where did it start from? It started from here. Some traders will argue that it started from here, from where the momentum is high. Okay. That's why I say do your back test and see how it works. Right? So now you can see from here, we are only all through this area, we have been only interested in buying. And I bet you, if you have been buying, you will make money. If you try to sell, you will lose. If you have been buying, you make money. You'll be buying breakouts, you'll be buying liquidity sweeps, you will keep buying, and you can see that you would have made money. Now, from this point here, okay, you can see this is a pullback, this is a pullback, this is a pullback, right? At this point, this level has been taken out. This level is now taken out. So once this level is taken out, you exit. What I mean by exit is you wait. Okay, you wait, and then you look at the market. That's why you have to draw this level there, so that you see even during the day when the level is taken out, you know that the level has been taken out. Your Oga is now taken out by the pullback. Okay, so we are saying if the market is pulling back, it's not supposed to crash. So if it crashes like this, it means that there's a possibility that the trend is changing. Okay, even though in this case we don't have like a very good example because the trend clearly did not change. So, but you have to wait, and then you have to be cautious. Right? You have to be cautious. And then this means wait. It doesn't mean sell. When you can now start selling is if this guy that crashed, of course, this is now the new boss. This is what we assume. Right? We assume that this is the new boss. Okay? But before that, we want to see the market break the low, come down, and then give us new low. But that did not happen. So it means that this was invalidated. And then traders have to wait. Once this place is, of course, you have to wait. It means that you don't know what is happening in this market at this moment because of this particular, this can be the introduction of the bears in the market. We don't know yet. So if it is not, we want to wait until this high is taken out. The moment the high is taken out, we now know that, okay, our bias is to buy. That's what I'm showing you is the right way to approach it. And you can clearly see that once the condition is not favorable, once it's not easy for you to understand, it means that the condition has changed. You wait. See how easy this one was. It has to be easy like this. That's why you have so many markets to choose from, as long as they are major pairs. But before you choose them, do your back test. This is an example of a healthy trend. A healthy trend is a trend that bounces off of the 50 moving average. Such markets would change support to resistance along the way. Okay, it would change support to resistance. Resistance becomes support, just like that. It will keep changing it like that. Right? Keeps changing it like that. Those are healthy trends. So your bias is to sell. You only want to sell. Observe that the market begins from the London area, it goes down. Market begins from the London area, it goes down. Market begins from the London area, it goes down. That's what we're saying. Once there's a clear trend that you can see, your bias is to sell. Okay, take note of this. That's a very important concept that I thought I need to share and that you need to understand and take advantage of. Okay, so that's going to tell you, in addition to what I've told you already about the daily, that's going to tell you whether that day you are buying or selling. The actual process of buying and selling is not difficult, as you already know. What might be difficult is, of course, this is also not difficult, all right? So what you have to strengthen is executing correctly. Okay, execute this one thing that you believe. Execute it correctly. Follow it, do your back test, and then do so many examples so that you know how to execute correctly. You're taking the trades that you should take without hesitation, without jumping the gun, without taking the trade, without before seeing all the setups. Okay, so what we're saying is you want to see all the setups play out. You want to see everything before you put on the trade, right? No trading error, no trading fear. Take 1%, take 0.5%, kalas, and then you are good, right? Okay, so I'm gonna quickly go through the rules. Then we'll look at an example because I believe I've touched all the most important things that are going to help you, take the setups correctly, right? I'm going to go over, the rules now, and then we look at. I've just touched them briefly. Okay, so first and foremost, market structure. I have talked about that. Then your confirmation. I already talked about that in the previous video. So please do well to go back to that video if you have not seen that video. The rule is that you must see for the breakout or the liquidity sweep, all right, is a candle pattern. We're using the 5 minutes time frame, okay? And then we want to see the candle patterns that we have said we must see. All right. So just a quick recap. This is your Asian low, Asian high. Market has been in the Asian range, right? Now London is supposed to open at 7 o'clock in the morning. Now, if you're trading a breakout, what you want to see is a marubozu. A marubozu is a trend bar that has little or no wick at the top. What this means is that if you're trying to trade a breakout and the bar that is breaking out is not a breakout bar, then it doesn't make sense for you to try to trade it. So this is the first condition for your entry confirmation. A breakout above the line that is a marubozu must be a marubozu. It must be a marubozu. Okay, marubozus. The ideal marubozu does not have any wick. Ideal marubozu has no wick. So this is supposed to tell you that if you're seeing wick, it's supposed to make you hesitant. Now, when you get a marubozu, you want to see after a marubozu, you must see either, this is 5 minutes by the way, 5 minutes. You must see either an inside bar or what we call a follow-through bar. Okay, a follow-through bar. Follow-through means that you broke out and then the next bar continued to break out. That's a follow-through bar. Now, an inside bar is a small, the inside bar has to be small. Look at what I wrote here. So I said for the breakout, right? For the breakout, I'm talking about a marubozu with, that's why I say plus a follow-through bar. This is a follow-through bar or an inside bar. A follow-through bar you just heard is the same color. That's the same type of candle. Not like exactly same size and all. But if this is green and it has little or no wick, I want to wait until I see another candle that is also green. You might say, the market is going to go too far away. No, don't be in a hurry. Okay, because these are signs of a breakout. We want to see them. Sign of a breakout is a breakout bar, a follow-through bar. That's a sign of a breakout. Sign of a breakout is a breakout bar, a reversal. Price action traders call reversal a retest, and then a continuation. This is what an inside bar is. An inside bar is your retest. When the market breaks out with your Marubuzu, you want to see a small black candle like this. Small one. Of course, it cannot be bigger than this. You don't want it to be bigger than that. If it's bigger, you cannot take the setup. Because if it's bigger, it means that it's an engulfing bar for a sell. So a small inside bar. This is what I refer to as inside bar. Right? This one inside here. And then if we call it an inside bar, it is inside the candle. And then we need the next candle, which is now going to be the breakout, the trend continuation candle, to be above this inside bar. So what you can do here is, once you have your breakout and your inside bar, you put your entry 2 pips above. And then your stop loss where? Your stop loss will be, of course, the rule for the stop loss says that the stop loss will be the recent swing or the middle, the mid-Asian range. That's somewhere in the middle of the Asian range. Okay, so sometimes the market just trends and there is no swing, right? So you can put your stop loss just below the middle of the Asian range. Take note of what I just said. Just below the middle of the Asian range if there is no swing. But if you can find a swing, then put your stop loss at the swing. And then your target is what? Your target is what? Target is 1:5. For the London break, your target is 1:5. For the London sweep, your target is 2 RR. Okay, so your reward is 2, your risk is 1. Take note of these things, guys. So this is your entry for the breakout. Okay, that's your entry for the breakout. You want to see a trend bar followed by an inside bar. Then the next bar is supposed to take you into the trade. If it doesn't take you into the trade, if that day is not going to, if you think that that day the market is bullish, that's going up, if that day is not going to go up, this after this inside bar, right? After this inside bar, this bar will not trigger you. And this inside bar will proceed downwards so that your buy will not be taken. Let me go to the chart. Okay, so I want to assume that you understand the entries for the breakout. So let's see if we can find breakouts real quick. This market is going up. Okay, so the condition is favorable. We go to 5 minutes. We're looking for, okay, I have to use my C trader because I have the software there. Okay, I have the software there, so I would use my C trader. Okay, guys. Now, this is EURJPY, and then you can see that the market is in a clear uptrend on the H1, and then our most recent boss. Remember that it was not free there, so let's use this one. It was not free because there was a trend channel line. Okay. So let's see if we can see a breakout here. Use dark color so that you can see. Okay, so this is the king, right? This guy here is the king. It's the boss. So from here we're looking to buy. Okay, from there we're looking to buy. We go to M5, right? We're looking to buy from that level. Yeah, so from somewhere here we want to buy. Let me throw in the Asian indicator. So that's the Asian range. So those of you who use TradingView, if you use TradingView, if you're using C Trader, change your time, right? Change your time so that it works appropriately with wherever you are. Okay, so look at your current time and look at the time where the market is at the moment. If it coincides with your time, then you go ahead with it. If it doesn't, you make the adjustment so that your Asian range will end exactly at 7 a.m. Okay, make sure you do that. Make sure your Asian range ends exactly at 7 a.m. All right, so in this market, we're saying that we want to buy, right? We're saying that we want to buy. Okay. Okay, so this is, have to zoom this. So this is where the London stops. We're waiting for a breakout to buy, and then the breakout is coming somewhere late here. And then the bar I'm seeing here is not exactly the kind of bars I want to see. Too much wicks at the top, so I have to wait. I wait for this place, and then I have entry bar, follow through bar, entry here, stop loss here, target 1:5. As simple as that. Go to the next day. I'm going to still talk about some exceptions, but for now, I don't want us to be bothered by all of that. This is liquidity sweep. This one fails. This one works. Okay. Still for a buy. Still for a buy. Right? We're still looking to buy. Oh, okay. So I think my chart has gone all the way to the latest price. No wonder, because I didn't trade EURJPY, obviously, because even though the market is going up, there is a barrier, so I didn't trade it. Okay, so we know that all through this area we're supposed to sell or supposed to buy, right? Let's look for more buying setups. Okay, because I need you to understand what I am saying. I have to give my chart a moment. It's just moving on its own. Okay, so we're here now. We're here. Look at this one. This is the Asian. This is the Asian range. It stops at 7 o'clock. If you look, I don't think you can see it, but somewhere at the base here, what I have there is 7 o'clock. Okay, so this is 7 o'clock. So this is the high of the Asian. This is the high of the Asian. This is the low of the Asian. You can see high, Asian low. We're looking to trade a breakout because we want to buy, because we know that the market is supposed to buy, right? So where is the breakout? This here, this first one, I'll go in a little bit again. Okay. Now I want to believe you can see. This is the Asian, this is the level here. This is the level here. Okay, that's the level. Let me add another line to it so that you can see clearly. And make it thick. Okay, so this line is the Asian high, right? Now look here, what you see is a trend bar. Now it's not the best. It's not the best. Okay, it's not the best. And then you can see what has happened throughout that day. You see, because the candle that is talking you into the trade is not the best. Nonetheless, is an entry, and you wouldn't have been stopped out here. Okay, you wouldn't have been stopped out, right? You can see this is your stop loss, the previous swing here, here, here. These are all swings. Okay, they are all swings. This one, right? It's a swing. This one, another one. Okay, you wouldn't have been stopped out. Your entry where? Your entry here. After this bar, there's a lot of rejection, so I will be wary about it. But you can see we have these inside bars. These inside bars are telling you that the market is retesting the level and it's trying to continue. Okay, so unfortunately for the market, it was faced with low volatility. But we know that after a long period of reduction in volatility, this is bound to happen. It's a given. It's bound to happen. The market goes from trend to flat to trend to flat. Asia to trend to London break to New York, like that. That's how it moves. All right, that's how it moves. Okay, so so where will your entry be? Your entry will be just above the bar here. 2 pips 2 pips above here. I'm guessing that this candle would have taken you into the trade. I believe it would have taken you into the trade. And then stop loss here or here, okay? As close to the middle as you can, all right? Because the more you stay around the middle, the better for you, okay? There are some times when you see the swing will be very clear, okay? The swing will be very clear. But when it's not clear, it's just moving all the way, go just below the mid-range of the Asian session. This is the Asian session. This red line to this point is the Asian session. If you don't have C-Trader and you're using TradingView, on TradingView, search for EURJPY. EURJPY, sessions on the chart. I've posted that thing before. Search for sessions on the chart, okay? Search for this class taking a lot of time, so I'm not going to show you that now, but just search for sessions on the chart, I think, just sessions on chart by EURJPY, okay? You'll find his indicator. Just tweak it a little bit to look like what I have, right? So uncheck some things and check some things. You'll see the way I did it, you know, on my okay, somebody's asking what is LS and LB. London sweep is LS, or liquidity sweep is LS, okay? And then someone is asking what is LB. LB is London break, okay? Breakout of, you know, the London session break. That's LB, all right? So LB and LS, all right? It's just the way I call it, nothing special. So you can see, obviously, if you're taking this trade, stop loss here, entry here, and then you step out, you come back by of course, if you come back by 11 o'clock, your trade will still be here. And that's what brings us to, you know, the other thing I'm going to talk about, the idea of how do you manage your trade? How do you manage your trade when your trade doesn't take off, when the liquidity doesn't favor you? You know, because there are 5 case scenarios for every trade. Traders have to know them. 5 case scenarios for every trade. I teach this, you know, in some of my course. If you open a trade, there are only 5 things that can happen. There are only 5 things that can happen. Number 1 is either immediately you enter the trade. This is your entry. Immediately you enter the trade will run to your target. This is the one everybody likes, right? Number 2, you enter the trade, it will nosedive. It will just go straight to your stop loss. Number 3, you enter the trade and the market goes and then is pulling back, but it's going in your direction. It's pulling back, but it's going in your direction. This is the one where you see traders do nonsense. They end up taking smaller amount. They take a smaller amount because the market is pulling back against them. And then that's why I say don't ever break even. Don't break even. Why are you breaking even? If you break even from here now, this one is going to stop you out. But this trade still went. So don't do that. The next one, okay, the market, you know, picks your entry and then it goes up, you know, it's going up, but then it stalls. Oh my God. That's exactly the example I just gave you now. It stalls. What do you do? What do you do? Right? What do you do? Do you close the trade? Do you break even? Do you, what do you do? All right. Now, this is some advanced thing, right? Because it's going to depend on what you think New York is going to do for my strategy. If the market stalls, now, it's going to depend on what New York is going to do. And I can't go into that. Obviously, I can't go into that because we don't have to do everything in one class. Okay, so hopefully in subsequent classes, I teach just my one-on-one students this particular thing, you know, and the guys I have for the group mentorship. Okay, because I spend more time with them. Okay, and I teach them something every day, every 3 times a week, like that. Okay, so they get all the good stuff, so to say, because obviously we spend more time. For you guys, I mean, we're only learning like once in a while, right? So I can't teach you everything. So, but what I have to say is, if you see the strategy here, I said that under trade management, I said set an alarm. Of course, the alarm has to be for for your entry, okay, you don't have to watch the chart all the time. Okay, so if there's an Asian session on a market that you're sure of, you know the direction, okay, you know that it's going up, you're sure of that direction. Now what you're going to do is very simple. Just put an alarm at the top and at the base of the Asian session. All right, when you put an alarm at the top and at the base of the Asian session, that's by 7 o'clock. Okay, so after 7 o'clock, you put an alarm. Once the alarm is triggered, you are now watching your chart. So you are moderately active. You're not completely active in this strategy. You are moderately active, right? So you start the trade and then you come back again. You can tell Siri to set an alarm for you by 11 a.m. You come back by 11 o'clock or 11:30 to see whether your target has been hit or your stop loss has been hit. If you have this case scenario, your target would have been hit. If you have this case scenario, your stop loss would have been hit. If you had this case scenario, if you were watching the chart, you would have done rubbish. And you can even blow your account because you'll be trying to catch this market. So if you have this case scenario, your target would have been reached. If you have this case scenario, whatever you do is going to depend entirely on you. And then, of course, the fifth scenario is where you enter the trade and then the market is, is going against you, but it's not going so fast like this number 2, right? It's going against you quite all right, but not so fast. This is the one where you see a lot of traders start to move their stop loss down so that the market doesn't take them. And then before you know, the market will crash and then they will blow their account. Okay, so if you are wrong, stay there and then know that you are wrong. You are wrong. Take the loss. Don't fight with the market. If the market doesn't want to go your way, it doesn't want to go your way. You are not the one that moves it. So why are you pushing your stop loss? And then if you do this once or twice and it works for you, the market eventually goes. The next day you come and you will lose your money. So the strategy is designed to be a set and forget strategy. Look at it here. Set and what? Forget. That's what I said. Set and forget. Is a set and forget strategy. So guys, take note of these examples that I've given to you. Now that's going to bring us to trade management, which I cannot cover in this course. But for the most of it, this strategy is going to give you money. For the most of it. For the most of it. Okay, so that is how you take the trade for the breakout. For the London sweep, it is a similar thing. The only thing is that this time around, you're looking for reversal bars, right? You're looking for reversal bars. Reversal bars from, if we're saying that this is the London range, and then the market has been moving, within this range, we want to see a reversal that says that the market wants to take away all the stop losses that are here, right? The market wants to take the stop losses and go up. So you know beforehand that you want to buy. So if this market breaks out to the downside, you are not interested because your directional bias says that this market is supposed to go upwards. Now, what are you looking for even if the market is here? You're looking for your pin bar. You're looking for what? You're looking for is either you're taking the pin bar, which is the pin bar right here, or you're taking the engulfing bar right here, that's engulfing bar, or you're taking the indecision bar and the trend bar. That's indecision bar followed by a marubuzu. Then wait for an inside bar, place your entry above it, and then go for 1:2. So what we're saying is very simple. You want to see a pin bar, that's a hammer or a shooting star. Okay, a hammer or a shooting star, followed by an inside bar, and then you go, or followed by a follow-through bar, and then you go. So it's either you see an inside bar or a follow-through bar. If I'm not seeing a hammer and I see, of course, the market tries to break out to the downside, immediately it is followed by an engulfing bar, right, for a buy. I'm going to put my entry 2 pips above this place. And then I'm going to hope to see some sort of inside bar. An inside bar is actually not compulsory for the sweep, but it gives you more, verification that if the market breaks like this, and then the sellers attempt to go down, but they couldn't. If the buyers come back, there's a high chance that they will actually go. And then what is your stop loss? 2 pips below this candle, 2 pips below this candle. And then your target, 1:2. The height from here to here, 1:2. I told you in the other class, there is an advanced management where you can separate it into 2. Okay, close 1:70 at 1:2 and allow 30 to run. But this is going to only be for those who understand how far the market is going to go. So if you're not very confident about that, do what works for you 100%, not 100% still, but what works for you often, right? Do what works for you often, and then see how much you can make. Then over time, when you have mastered some more things, you can now add more flesh to it and do more advanced things. All right. So, of course, the third one is the indecision bar, followed by indecision bar like this, followed by a trend bar. Right. These are the 3 bars we want to see. Let's go. I won't take too much examples because of time. So let's just look at the one I took this morning on EU. Right. EU is a very loud sell because everything says sell on the H1. Look at it. Everything on the H1 says sell. None of the big boys have been taken out. None. So it's a sell, right? This morning, when I called it, some people were asking me, is it a buy or a sell? And I'm like, okay, fine. I know I haven't taught you that, but now that I have taught you, I'm going to be hoping that you will no longer be asking me if it's a buy or a sell. So even if the market pretends to break out, you know that it's just pretending. It's not going to break out. So what are we looking at? This is the, of course, today is still on. So is this line here. I'm going to put that line. This is today's high. This light blue line here. That's today's high. Okay. I'm going to make this thick. That's today's high. And then this is today's low. Asia. So from when the market started moving, this was the lowest point up to this point, 7 o'clock. If you look down here on my chart, this place is 7 o'clock. Right? It's 7 o'clock. This is 7 o'clock. This is Asian high. So this is where we were. This is where we were as at 7 o'clock. Now, of course, I'm always up early because I have to place this London trade, right? So immediately, if you see what's happening here, of course, we agree that the market is selling, okay? And we're only taking selling, right? We're only taking selling trades, on EU. We're only taking selling trades. Now, look here. What would you have done here in this example? Now, the market gives you 7 o'clock, it closes. Then the market pretends to break out, right? Market pretends to break out. And this is what I was telling you. Even if you're wrong, right? The market breaks out. This is a good Marubuzu. This is a follow-through bar after the Marubuzu. Now, 2 pips above this candle, you will not be triggered. 2 pips above this candle, you will not be triggered. Do you get it now? That's why you need to wait. If you just said, okay, break out and then enter, you will be triggered and then you'll be stopped if you were trying to buy. So you can see how we are still helping ourselves, right? We're helping ourselves to, minimize some entries that would have led to a stop. And then I need you to know that all of these have come from many years and months of trading this system and strategy. And it works. And I tell you, put food on my table. It works. So what are we saying here now? We are looking for either a pin bar or an engulfing bar, of course, a bearish engulfing bar, or an indecision bar followed by a Marubuzu for a sell. That's what we are looking for after 7 o'clock. Now, what do we have? Very, very clearly an indecision bar. Look at it. This is spinning top. If you don't like this one, see the next one. They are small body candles. They are all small body candles in comparison to the other bars. So when you see a small body candle like this at an area of sensitivity, that is the Asian high, you know that they are struggling to decide on where to go. This is a trading range. They are struggling. They don't know whether to go up or go down. Now, who wins? Who wins? Black wins. That's what we're saying. Black wins. And then what do you get? Inside bar. Inside bar. Inside bar. Very important. Inside bar. This is another attempt for the breakout to continue, which failed. What did I do in the morning? Immediately I saw the indecision bars, and then I saw the Marubuzu to the sell side. What did I do? Immediately this bar started to form to the upside and closed. I just put my entry at the low here, at the low. If you look at the Telegram, you see on the trade where I have my MT4, you see my entry just below that candle there. And then, of course, my stop loss is above here. It's there. Go to the MT4, to the Telegram. You see them. They are there, right? And then my entry was here. My stop loss was here. And then 1:2. I mean, just before you know it, 1:2 was triggered. And then advanced off. I add to position. I add to position. I add to position 2 times. And I make big money. And I do this every day. Every day. I'm talking about this morning. All right? Those of you on the Telegram channel, you know what I'm talking about. It's there this morning. Right? It's there this morning. This morning. I'm talking this morning. Right? I'm talking this morning. Okay? So, there is, this is what I'm talking about, guys. This is what I'm talking about. This is this morning. This is exactly the chart I just showed you, right? Exactly the chart I just showed you. This is what you have here is indecision bar, market sells, and then inside bar. Of course, this is where the high was for the London, right? Inside bar, and then you can see my entry bar here, right below this white bar, right below the white bar, and I'm taking in by this candle. Okay, advanced stuff for the add-ups. Okay, advanced stuff, right? Advanced stuff. I can't go into that now. Okay, but I always say that you have to have the stomach to see your gains turn to losers if you want to win big, right? And then you have to be able to add to a position when you know you are right. That's how to make big money. You got to be confident enough to say, okay, today is a good day. I'm winning today. I have to add to position, right? All right, guys. So, thank you so much, guys, for joining me today. I have to, whether I like it or not, start to stop the class because I think we've used about 2 hours. Okay, so that I think is enough for any one class, so that your brain can still cope. Okay, so let me know if you have any questions. Let me know if you have any questions. If you have any questions, let me know. I will just go through every other thing so that if there's anything I haven't said, I will mention it. But that is how you trade this strategy. I have used a breakout bar. As we go on in the group, right? As we go on with the Discord channel. If you're not on the Discord channel, do well to join. It's going to help you. It's free. It's free. Okay. My paid classes are expensive. $700 for Nigerians is expensive. I know, right? I take one-on-one $700. I take for the group mentorship, I take $140. Okay, that's a group of 12 persons. Okay, so it's like a group study. Okay, so I teach them like a class, right? Then I have the one-on-one mentorship. Okay, $700, right? So these are the people I spend most of my time with actually. Okay, but everything I'm giving you here for free. You won't get it anywhere for free. Okay, and I'm doing this because I know this is enough information for you to begin to milk the market. And then you're going to be with me, over the years, you will find, or over the months, you will find that I'm going to maybe give out scholarships, give out opportunities for you to come in, into the actual trading circle, right? Whether you have money or not, okay? Your skill makes way for you, right? So I'm going to give you room like that, okay, over the years. All right, but in the meantime, take advantage of this one that you have. Okay, take advantage of this one that you have. Right? Sometimes you still need time. You need time to fully mature. You need time. Okay, so don't be in a hurry. All right. I was saying this morning that some people we don't care about you. don't care about you, right? Nobody cares about you. Nobody cares about you. What we want to know is, can you perform? Can you perform? That's what we're asking you. Can you perform? Can you give us, can you give us ROI? That's what we're saying. If a prop firm says, give us 10% by the end of the month, can you perform? That's the question. If a prop firm say, give us 8% by the end of the month, can you do it? That's what we're saying. That's what we're saying. That's the goal. Forget about capital. I'm giving out $5,000 evaluation account. Okay, I'm giving it once every month for free. Once every month, I give out one evaluation account for people who know how to trade. Once every month. Okay, so if I'm gonna, this month is gonna be this month we're getting into is gonna be a demo contest. So I'm gonna look at those of you who are really good. You take part in this demo contest. Okay, if you win, you get $5,000 to trade with. Okay, just follow the rules. Okay, so the demo contest is going to be FTMO's trial. Okay, so you take FTMO's trial and then let me see how you performed. Okay, so one person must get it. If everybody fails, I'm going to take the best loser. Okay, I'm going to take the best loser because I must make sure I'm giving out the $5,000, prop firm. So, because I want to empower you guys. Because there's money to be made in the market. There's money to be made in the market. There's money to be made. So don't go and sit with your mother in her pot when you can do something for yourself and change your story. St. Paul says, I'm not afraid of these revelations. Okay, because it is the word of God, is the wonders of the Lord that changes the stories of men. Right? You find that in Romans. So guys, I believe that you understand what the entire frame of the strategy is about, right? I believe that you do. So since you do, I will be rounding off now so that we can go and sleep. I just need to... Okay. All right, guys. So this is I think I've covered this. I've covered this. Okay, so your stop loss, these are the rules. I'm going over the rules now. The strategy, you use the market structure on H1. Okay, you use the market structure on H1 to know the direction. Okay, and then the entry confirmation, you want to see a pin bar, or an engulfing bar. I've talked about these bars in the previous class. Or two bars, indecision bar followed by a trend bar. And then you want to see a small inside bar. A small inside bar will help you to say that, okay, these people are not serious, even if they want to break out. It doesn't mean that it will always work, but it's an added advantage. Okay. And then this is for London sweep. For the London break, okay, you want to see a Marubuzu. After a Marubuzu, which is a strong breakout bar, you want to see a follow-through bar or an inside bar, right? A follow-through bar or an inside bar. Okay, so a follow-through bar is another trend bar. Another trend bar. And then wait for the inside bar. After the inside bar, you execute. Don't be in a hurry. Then for the stop loss, 2 pips below or above the bar. If you're taking the London sweep, 2 pips below or above the bars. If you're taking the London break, you're using the recent swing or somewhere around the middle of the Asian range. If there is no swing. Your target, if you're taking the London break, if it's a breakout, you're using target of 1.5. If you're using the London sweep, you're using a target of 2RR. There are advanced stuff on as regards the trade management. Okay, so I can't talk about all of those things now because this video is too long already. The pair selection. Well, how do you know what pair to take? Look at the consensus on H4. Now this is another angle to it. Okay, this is, remember when I started off, when I was telling you that there is a way that you can know the market condition that is right for you. That's what I mean by consensus. I have to teach it in another class. Okay, I have to teach it in another class. You're welcome. You're welcome. All right. TDI indicator will not work here. I'm not using any indicator at all. The only thing you see me use here, if TDI will work, fine, do your back test, but make sure you meet the criteria of a good strategy. I don't know if TDI is going to work because I haven't tested it. I haven't used it. I only used TDI when I was starting out as a trader many, many years ago. That's when I used TDI. It was like the holy grail until I took losses, right? So I'm not saying TDI will not work, right? I don't know what I know now then. If I did, maybe I would have fine-tuned it, you know. So see if it works for you. But I think TDI guys mostly trade divergence. Okay, they mostly trade divergence. They prefer to use the TDI indicator for divergence. All right, so I don't know if that is applicable to, you know, there was the breakout and the sweep that we're talking about now. If it is, by all means use it, but the lesser the variables that you need to tick, the better for you. You can see, even though it's looking like a long video, the only thing I'm looking at here is Asian low, Asian high, right? Asian low, Asian high, breakout candle. When I see a breakout candle, I wait to see if everything is aligned. Then I enter. That's all. I don't need to know any other thing. I go to H1, I do my structure, check for who is in control. All right. So you do the consensus. I call it CNS. That's what you're seeing here. CNS. It's called consensus. So you do your consensus on the H4 to know where the trend is and which pair is moving at that time, where the big banks are taking their money to, right? And then if I will share it with you quickly, is what I've already showed you here. If you want me to share with you real quick, is what I showed you here. I already showed you. Okay, so I'm looking at all this market at the same time, right? And I'm asking myself, of course, on H4, I'm looking at it and I'm asking myself, what's the market structure? That's all. That's all. What's the market structure? Where is the market? How is the market going? What are the MAs for beginners? What is the moving average doing? Is it tilted up? If it's tilted up, then the market is in an uptrend. If it's tilted up, the market is in an uptrend. Then I will go to my Excel sheet and I will say AUD NZD +1. Excuse me. Meaning that AUD has strength over NZD on that time frame. If it's tilted down like this, and it's in a range like this, I will say 0, 0, because it's not going up, it's not going down. This one is not going up, it's not going down. This one is not going up, it's not going down. But you will see the ones like this CHF. Oh, I think my image is over CHF and JPY. So you will see CHF JPY is going straight up. USD JPY going straight up. CAD JPY going straight up. So this is the area where you have to now learn price action, learn support, supply and demand, learn trend line, support and resistance, and all these price action things, so that they will help you to know the price action. I always do the weekly analysis, and I need you to follow me for weekly analysis. Right? Because sometimes I look at the weekly analysis and that one can tell you beforehand what the bias on that trade is. The only thing you just need to do after you know that, like I told you, Euro USD was going to go down all the way, right? You already know that that is my price action analysis. So all you need to do is to start looking for setups to sell from the London. That's all. Okay, so this is how you define. You avoid markets that are ranging. Markets that are ranging, you avoid them. And then you stay in the markets that are trending and make money. Right? You stay in the markets that are trending and you make money. Okay? So I'm going to do a separate video for this where I'm going to teach good. This particular consensus is deep. Okay? So you know how to arrange it, and then you're going to come up with a graph. The graph is going to be a currency strength graph. This currency strength graph is not based on indicator. It's based on price action. Okay, it's based on price action. The strength is saying, of course, currently dollar is strong. Okay, dollar is strong and JPY is weak. So you will clearly see on my indicator, right? You currently see that on the indicator there, the dollar is high, is high to the strong side, and then JPY is high to the weak side. So you know that the market is in favor of USD. All right. So if it happens on 2, 3, 4, 5 pairs, it adds up and then it shows you that the dollar is strong. If JPY is weak on 2, 3, 4, 5 pairs, it shows you that JPY doesn't have strength. So we go in and we start looking for opportunities to buy. That's what we are saying. Right? We look for opportunities to buy from them. Okay? So take note of that. I'll teach that in a separate video. In fact, I'm going to teach that during the mentorship program. Okay? The mentorship program is going to start by first week of next month. So I'm going to teach you guys twice. I'll try. So I'm going to teach you guys twice every month. 2 times every month. 2 times every week, twice for 1 month. I'll teach you 2 times every week for 1 month so that I can cover some very important concepts that you need to make money forever. I'm saying forever, and I'm serious about it. Forever. So it's a free mentorship. It's a free mentorship. Okay, it's a free mentorship. Join. That's all I have to say. I don't know what else to say more than like this. Join. If you don't have Asian range, if you don't have, you can manually just draw from the top and the base. Kali is asking. You can draw from the top and the base. You know, from the top and the base. That works. 100%. That works. Okay, so from the top and the base between yesterday's close all the way to 7 o'clock in the morning, when you cover the price to that extent, you start to wait for breakout or liquidity sweep depending on your bias. All right. So, of course, my style is, we're looking at the major pairs. Now, before you take any of the major pairs, make sure you have backtested it. I'm telling you this now. It is important. Before you take any particular currency pair, don't take my word for it. Go and backtest it. Do few backtests. You will see different examples. I can't cover them here. This video is already long. If you do the backtest now, you will be seeing so many examples. Then you come back to me with more intelligent questions. And then I will tell you how to go about it. My goal is to make you profitable. Okay. So we have the major pairs. And then we have the time frame. Time frame is usually, you know, of course, it's multiple time frame analysis. You're maybe during the weekend you're looking at the dailies to see your bias for the week, and then at the end of the day you're looking at the H4 to know which market is trending, which market is not trending, and then you come to the H1, and then you're looking at the high and the close. If you want to ignore every other thing and you pay attention to only H1 and M5, right? Only H1 and M5. Just check the market structure on H1 and check the M5 for your entry. Kalas. Check the market structure on H1 and check the M5 for your entry. Okay? And then what is your trading style? This is very important. And I'm going to give you, don't miss my mentorship program. Right? Don't miss my mentor. The free one, I'll try my best to cover as much as I can. Okay? I will try my best. And I promise I will try my best. Okay? Because there's a lot of things that traders need to know. Traders are switching from day trading to swing trading. It's crazy. It's not supposed to be done. If you're a day trader, you have no business holding your trade to the next day. What defines a day trader is same day trade. Same day. Take note, same day. So you cannot say you are a day trader and you take a trade today and close it the next day. You're not a day trader. You cannot say you're a day trader and you are taking trades like 100, 12, 20, 50. That is for scalpers. Stay on your own lane. Stay on your own style. Stay on your own style. Don't take a scalping trade. Don't take a scalping trade as a day trader. Don't take a swinging trade as a day trader. Your goal is to get in for that day and take what you can take in few hours. That's why you see here, I say the style is, of course, it's a trend continuation style, is for day trading. It must happen in the same day, and then you can hold only but few trades. Only but few trades, not many trades. Few, 2, 3, 4. Look at all my winnings I always share with you. You won't see more than 3 trades or 4. Max is 5. And for me to take 5, it means that I'm risking 0.5 on each. I'm risking, I still have open positions. That's why you're seeing up to 5. Because where am I running to? Where am I running to? For most of my accounts, I have quite, a lot of money there. So if you have $100, you can be racing. Right? You can be racing. But if you have 400k, 800k, 1% of 400k is $4,000. 1% is $4,000. Right? So you go by the percent and go gradually. So if you open 20 trades, you want to blow your account. That's what you want to do. There's nothing again to say. You want to blow your account. All right, so hold for hours, all right? And then you're moderately active because you're shuffling between time periods, okay, to check the trade, to manage the trade and all of that, okay? In terms of trade management, I'll teach that good stuff later. I'll teach it later. Okay, so your risk has to be 1% max on a trade. I use 0.5 most times, okay? And then don't take more than 3% max on your open trades. That's the rule for this strategy if you want to be profitable. Because if you have 4 winning streaks, if you have 4 losing streaks, you have the maximum you can have is 4 losing streaks. Maximum. Go and check it. Maximum you can have is Monday you lost, Tuesday you lost, Wednesday you lost, Thursday you lost. You can't lose on Friday. It's not possible. It's not possible based on the win rate of this system. Excuse me. You can't lose 5 times in a row. I'll show you the mathematics much later. Okay, I'm saying it's not possible like I'm God. Okay, it's possible, but it's rare. It's very rare. In a row is rare. Is rare. Okay, because this is what is going to lead to what we call drawdown. Going to lead to drawdown. So the maximum drawdown you can have on this trade is if you lose 3%, 1, 2, 3, 4. That is 12% maximum drawdown. All right. And if you win in between, it means that you're winning maybe 2% here and there in between. So it's not a streak. So you won't suffer that kind of loss. And then if you have a losing streak, you have a winning streak. If you have a losing streak, it means you have a winning streak. It means that you can win for more than 4-5 times consecutively. And when you do that, you're taking 2% each time. You grow your account fast. Okay. So set your alarm. I already said that at 7 a.m. for the high and low. At 7 a.m., set your alarm on your phone to remind you to look at the chart. And whatever you are doing, by 6 p.m., you are done. Whatever you are doing, by 6 p.m., you should be done. Close the chart and exit. Now, review your trades. That's the next thing. Where is it? Review your trades. Once it's 6 o'clock and you have closed all your open trade, review them. Just like I opened today's trade now and I showed you, okay, this is what I did. Review it. Over time, you will now begin to see the ones that gave you the win. And then the ones that did not give you a win, when you see them tomorrow, you say, no, I took this thing sometime in the past and it didn't work out. That way you will know that, okay, this thing doesn't work out. So next time you won't trade it again. Even if it wins that day, you know that it's not a favorable setup. That's what we're saying. Whatever you are doing, close all trades by 1800 WAT. That's 6 p.m. Nigerian time. Close all the trades by 6 p.m. You have no business holding the trade till the next day. There are so many reasons why I cannot go. There's just too much to teach, guys. There's just too much to teach, but I can't teach everything. Okay, we have the normal pattern is, if this is if this is what the market does every day, accumulation in the Asian zone, right? And then what do you know? Market goes, takes the liquidity sweep, right? And then it goes, come down, right? This is one way. There are other ways. This is one way. So this is Asia. This is London, right? From here to here is London, right? London, Asia, right? Now, New York can come. Two things can happen. Of course, when London goes on a break, whenever London goes on a break, what do you notice? This is London break, break time, right? This is London break time. So around 11 o'clock, you see that the market will be ranging. Of course, the market has to range so that it can, the New York volatility can come and then either push the market lower, right, for a continuation, and then towards the close of the day, after 6 p.m. or thereabout. That's why I said close all trades by 6 p.m. max. After 6 p.m., you see the market will retrace a little bit before Asia will come the next day. Okay. Welcome, guys. Welcome. Okay, so this is what happens. Now, New York can decide to continue the trend or reverse the trend. Okay, so New York can decide to go like this. So this is what can happen every day. That's why when you see a bar, the bar goes range on Asia, liquidity sweep, bar comes down, New York, maybe it ranges in between London, New York close it at 6 o'clock, and then the market will give you a little wick, and then it closes. That's what happens every day. Okay, it could be different, but this is usually the pattern. Okay, that's why you see a bar is like this: the high of the bar, the open of the bar, all the way to the low of the bar, the close of the bar, the low of the bar. This is a bar. It's the full market. It's the full market. It's the full market. That's what you're seeing. That's the bar, right? Take note of that. Okay, so what we're trying to do, we're not trying to be too smart, okay? We're just saying, give us liquidity sweep. We will take some and go away. We're done for the day. 2% up, right? And then those are my one-on-one class and group class. I teach them how they can continue from New York, right? How they can continue from New York. Okay, you're done with the first phase. You take a rest. Come back during New York. New York is 13:30. 13:30. That's when the break happens. Okay, Lagos time 13:30. Check any chart. You see liquidity. It's called volatility. Volatility will come in, right? By this time. Okay, so it could be a reversal, it could be a continuation. All right, guys, I'm going to stop here. And I appreciate you guys, those of you who are my diehard fans that have stayed to take everything in. I appreciate you. And yeah, I see I see some of your questions. Sorry, in backtesting, because you have to pay on TradingView. Oh, this person is making a very important point. So he's saying that we need to pay on TradingView. Yes, if you want to backtest, this is very, very valuable information I'm giving you here now. If you want to backtest, there's an app called Go. What's it called? Go Chat. Go Chat. This is Go Chat. Okay, this is Go Chat. You don't need to pay. You don't need to pay to backtest on lower time frame. You don't need to pay. See, this is the chart. If I want to backtest, this is replay here. This is replay up here. Replay. Okay, my time frame here is 1 hour. I'll go to 5 minutes. Okay, that's replay. Then this is the bar. So if you want to do this on TradingView, you can't do it because you have to pay for it. But you can do any time frame here for free. Okay, so I'm going to replay now. So when you click on replay, you double click, and then you can see it's there, it's gone. Okay, so you play, then it starts. All right, so go chat, go chatting, Go chatting, go chatting. That's a substitute for TradingView. Okay. That's a substitute for TradingView. Thank you so much. Thank you so much. I am really grateful. I have to say I'm really grateful. God, I'm happy to see you people. Oh yeah, from Ghana. Yes, I'm happy to see you. Thank you so much. Thank you so much. Thank you so much. Yeah, the name of that app is Go Chatting. Go Chatting. Go Chatting. Search for it. Okay, Go Chatting. You can backtest with it for free. Okay, Go Chatting. Okay, guys. So thank you so much. Yeah, the only problem with Go Chatting is that it doesn't have Go Chatting doesn't have what's it called? It doesn't have what are these guys called? It doesn't have the indicator yet. They haven't developed the indicator for Go Chatting yet. Okay, so the indicator is not there yet. So what you do is when you are playing the bars, just use your eye to observe the time. You can speed it up, slow it down, pause it, observe the time, observe the time where it is 7 a.m. Okay, once you get to 7 a.m., you draw your high and draw your low and wait and see how it breaks out, whether it's breaking out up, breaking out down. Yeah, Joshua, thank you so much. Thank you so much. Thank you so much. Yeah, Mark, thank you. Awa, thank you. Yeah, as a beginner, just focus on few pairs. Don't trade the pairs that you have not backtested. Do not trade the pairs that you have not backtested. I've told you on TradingView, if you're using TradingView, I'm using TradingView on my phone, and on my phone, all you just need to do is search for sessions on the chart by EURJPY. Okay, sessions on the chart, EURJPY, and there you have it. Sessions on the chart, EURJPY, and then you have it. Just tweak the settings a little bit. In the next class, I'm going to show you how to tweak the settings if you don't know how to do it. So you check the first box at the top of the setup, then you check the first box at the top of the setting, check the last box at the base, and then uncheck the 3 boxes at the base for the other session. Allow only the Sydney. Is this Sydney session? I have a screenshot on the Telegram channel. Check the Telegram channel, guys. Let me close this class here. I want to encourage those of you who are not in the Telegram channel, join the Telegram channel. If you haven't subscribed, please subscribe, okay? Because I'm going to teach you so much more. And this is a new channel, as you can see. It's a new channel, okay? So I'm trying to build a fresh community online here, okay? So that I can get a chance to work with potentially outstanding traders, because I know they're here. Okay, I know they're here. Talented guys, smart guys, intelligent guys that will break the bank. Right? Girls, guys, everybody. Right? Okay, so if you know that you're good, and you're serious about this thing, stay with me. Right? Stay with me. I'll teach you good stuff, and at the end of the day, boy, your life will change. I can guarantee your life gonna change. See, some persons know me here, right? Like the guy Joshua, he knows me very well. He knows me from way back, from my university days, right? And I trek to school. I trek, like I walk to school. But Joshua sees me today in my Lambo. He sees me in my Bentley, right? He sees me traveling all over the world. He knows that there was a time I used to carry a public address system to go to the hostels to teach people how to trade forex. So if I can do it, why can't you? Why can't you? Everybody can. All right, guys. Thank you so much. Thank you so much for staying with me. I love and I appreciate you, and I hope to see you. I hope to see you soon. We're going to continue from. I'm going to post a schedule for how we're going to take the class. Right? I'm going to post a schedule for how we're going to take the class from first week of next month. Next month is going to be thorough for us. Next month, you're going to get better. I'm going to pack you with good stuff. The only thing you do for me today that I said, go and do your back test, go and do it. So that you flow with me. So that you as I'm growing with you, you are growing. You're not taking us back every time. See, you're moving with us, you're growing with us. Right? So if you're not in the Discord community, join the Discord community, because it's difficult for me. I can't open the Telegram because a lot of people would like to take advantage of groups like that. Okay, sell things, to promote other things, and then to do all sorts of things. So I just have that place as like the announcement board. All right, the community is in Discord, so join the Discord community. It's free to join. Okay, the only thing you just need to do is, like I always ask those of you that have joined, is to create an OctaFX account, send your details, and then kalas, you're done. You're done. And you don't even have to deposit into the account. So just create it, and then you're good. Or you create an IC Markets account. As we go on, you're going to create IC Markets, obviously, because they have very tight spread, and that you can use that help. You definitely can use that help. Okay, because IC Markets, some of their pairs are quite, huge. All right, guys, I have to close here now. Thank you so much. Thank you so much. May God bless you. I look forward to seeing some. Yeah. So he say he remembers at CVN Hall when I was inviting them for forex class by 12 a.m. midnight. Yes, boy, we did. And thank you so much, guys. Thank you so much for just believe in the process. If one man does something and he says that thing can be taught to another person, then that's all you need. As long as it can be taught, that's all. Okay, I'm going to teach you. Right? I'm going to teach you good. Okay, and don't be in a hurry to start trading and throwing away your money. Right? Don't be in a hurry. Okay, take your time. When you have gotten your edge, you have established it, you can see that, okay, you can trade this thing profitably on paper money. Then you're good. Take any account, you pass. Anyone, you will pass. I can't remember the last time I managed prop firms for people, right? I pass the prop firm and then I take a 50-50 split, right? So I do that for people who have paid for huge accounts, $400,000, $100,000, $200,000, like that, right? So I'm doing it and I'm passing all of them because it's the same thing I do, right? It's the same thing. There's no magic there. There's no magic. I look for the condition. I check for the direction. I look for my liquidity area, and then I try to enter from that place. That's all. That's what I do. Rinse and repeat. Thank you so much, guys, for joining this meeting today. May God bless you and prosper you through Christ our Lord.